Welcome, guys, to Professor's Opinion. And on this video, I want to talk about an important concept, which is basically what happens when the country's debt grows faster than GDP. Or to put it in more simple terms, what happens when the interest rate of a country's government treasury bond is far higher than the country's growth rate? Because that's basically what's going on in most Western countries right now. So right now, if you guys have followed global news, right now the current situation of the world is, especially the Western world, is you have a bunch of countries that are barely growing at less than 1%, less than half a percentage point sometimes in the Western world, but they're offering their bond interest rates at um, close to 3, 4%, 5% in some cases. So what happens in that situation? To put it simply, the middle class is getting wrecked in real time. And that's basically what's happening in the Western world. So when the country's GDP wealth share is not growing fast enough, but the debt, the money the rich are getting from the interest on the debt they're holding, they're lending out money, they're getting an interest on it. The rich are getting an interest on the money they're lending out. Okay. So their wealth of the rich are growing at a rate of, if you look at, for example, in USA, the treasury bond is around what, 2, 3% right now, 3%, right? Uh, yeah. So their wealth is growing at 3% every year, but the country's GDP is not growing anywhere near that. It's barely growing less than 1%. So what happens in that spread of 2 to 3 percentage between the wealth of the rich who are owning this debt or giving out this money, the wealth of these rich people are growing at a much faster rate than the wealth of the country. So in that situation, you're left with a very unique circumstance where the rich can basically, like, the, because the rich people's wealth are growing at much faster rate than the country's wealth, the rich people are basically going to eat alive the wealth of the middle class. Because you have to understand what's so the rich people own a certain percentage of the wealth of the country. Their wealth is growing at a faster pace than the country's GDP. So where do they deploy all this new money they've earned from the interest on the debt, right? On the bonds they owned and whatever. So where do they deploy this new money they've now gained? They have to deploy it somewhere. In normal situations, if the country's GDP is growing at a fast pace enough rate, they can deploy this wealth into the new wealth that's getting generated. But that's not the world that we live in right now, especially the Western world. So they have all this new money that they've accrued from the interest of the bonds that they own, but they don't have somewhere to deploy it because the country's wealth is not growing faster. So what they do is they go after the next best thing, which is existing wealth. So they'll go for the middle class because that's the wealth they want now. And once they've wrecked the middle class, then they'll go for the wealth of the poor. And that's basically what's happening in the Western world. The system is set up in a way that whether the country's GDP grows fast enough or not, if the country's debt is growing at a fast enough rate, the rich are basically doing just fine because they're getting a head start, they're getting an edge in the market in their rate at which their wealth is growing. They have an edge. So then they can deploy this new generated wealth to buy up the assets of the middle class. And that's concerning. That's basically why you have a shrinking middle class in the Western world. So, yeah, you can look at another scenario. Look at something like Japan. I mean, China is a very good example, right? Their GDP is growing at 5% every year. The bond interest rate is well below 5% in China. So you have a situation in China where the country's GDP wealth share pie is growing faster than the wealth of the rich that are owning the debt of the country, to put it simply, because the interest rates are lower than the GDP growth rate of the country in China's case. So it's interesting because now you're left with a situation where money that's accrued or gained or generated from owning the country's debt, that new money can be deployed into the new wealth that the country is generating rather than going for existing wealth of the middle class because the country's GDP is growing faster than the rate of inter- interest rate of the debt of the bond. So now you have this unique situation in China where you have an expanding middle class because of that. Same in Southeast Asia. So yeah, if you like, the reason I'm bringing out this topic is because there's a lot of talk made about tariffs, Trump, and whatnot. But I think the next big thing will be the emerging markets in Southeast Asia. So you're trying to find a country that has a GDP growth rate far exceeding the country's bond interest rate, because that's a country where the middle class is expanding, not shrinking. And that's a country where if you're a multinational global company, that's a country you want to set up your base in, because that's a country where you're going to have recurring, growing annual profits for the next decade or so. And those countries exist in Southeast Asia. You have countries like Bangladesh, Vietnam. These countries are, the growth rate is far higher than their interest rate. So, I mean, yeah, right now the interest rate is a bit high in Southeast Asia too, but that's going to come down pretty soon because it's not sustainable. But that's basically what you're looking for. You're looking for a country where the middle class is expanding, and that's not the Western world right now. So these tariffs, I feel like it's blown out of proportion in terms of the magnitude of the issue. I think that the growing middle classes exist in Asia, in Southeast Asia. Indonesia is another good example, right? And you're trying to find a country where the growth rate of the GDP is much higher than the interest that the country pays on its bonds. Because then you have a growing middle class, a growing market to sell your products into. And those are the countries you don't want to put. Trump is not going to put tariffs on. You don't see Trump putting tariffs on Indonesia or Vietnam or even Bangladesh. Why doesn't he do that? Because he understands that these are the next growing middle class segment of the world. So he wants to have good relation with these countries because he wants their American companies to sell their products to this growing middle class. And that's basically the game here. So if I think a lot of money is still going to be deployed in this Southeast Asian emerging stock markets, global financial markets. So yeah, I would say that's the next big thing. Yeah.